Aloha, I'm Carl Bonham, Executive Director at UHERO. I'm here with another UHERO focused video, this time to talk about our third quarter forecast release. And the forecast for Hawaii's economy is really a story of two different economies. There's Maui, where we're dealing with the aftermath of a pretty severe economic downturn post-wildfire and the prolonged recovery from that. And then there's all the other counties in the state where conditions really remain surprisingly strong. There's also two different stories about timing. There's the sort of next several years when we're still in this recovery process and building is ramping up on Maui, for example. And then there's beyond that where very, very slow or even declines in population and labor force growth will act as a considerable drag and mean that the overall economy will expand more slowly than it has in past decades. So if you look at this sort of tale of two economies, particularly, actually it shows up in all of the indicators. This particular indicator is the average daily census of visitors. And if you look at, they're all indexed to June of 2023 at 100. But if you look at what happened after the wildfires, Maui went from 100 to 50, right? So they lost 50% of their visitors very, very quickly. Then they saw a little bit of a recovery. They regained half of those lost visitors and then really just flattened out all the way through the fall and the spring, beginning to see a little bit of an uptick. But if you look at these numbers, so let's say second quarter of 2024, average daily visitor census for the entire state is down 7%. But that's completely because of a 25% decline on Maui. If you look at the rest of the state net of Maui, it's basically flat. And that you get the same kind of a story when you look at visitor spending. This particular chart is showing us the growth rate. If you take the first 7 months of this year, right, we have data through July, compare it to the first 7 months of last year, what's that growth rate look like? And unfortunately for Maui, it's about a 30% decline. But the entire rest of the state is up almost 1%. So if you just focus on the state as a whole, you would think there's something fundamentally flawed in the tourism industry, or the rest of the world is going through a recession or something, but it's just the aftermath of the Maui wildfires. Same kind of picture shows up in the labor market. Basically, immediately post-wildfire, Maui saw almost 7,000 job losses. If you look at July, as of the latest data point we have, and you look all the way out at July, Maui County is down almost 6%. Their job count is roughly 6% lower than it was a year earlier. That's about 4,300 jobs lost. But the entire rest of the state has actually gained jobs and is at a pretty healthy clip, 1.5%. So state net of Maui, jobs are up 1.5%. Now, beyond this short-term story, right, what happens when we go beyond the next several years and we think about the longer-term prospects for the state? Really, we're looking at a significant slowdown in job growth and labor force growth. And this is coming because of the demographic changes. Actually, if you look at where the state was in 2019, the end of 2019, the labor force today is almost 20,000 people smaller than it was back in December of 2019. And that's because of a combination of declining population, slightly lower labor force participation rates. And so as we look at population trends for the rest of this decade, the light blue bars here are showing us population growth, average annual population growth from 2010 to 2019, and then the gold bars are our forecast for how much population growth we will see from 2020 to 2029. And you can see that across the state, those growth rates are much, much lower. For the state as a whole, it's really a story of roughly flat. So that's a very small decline. The biggest declines are on Oahu and on Maui, and the biggest increases are on Big Island and Kauai. And those increases are coming because of in-migration. The natural change in population, basically with an aging population and preferences of younger people for having fewer children, mean that the natural change in population across the state is close to zero. Other than Oahu, it is essentially zero. So the only way you get population change, you get population growth and avoid population decline, is to either have in-migration or certainly avoiding out-migration. And going forward, that anemic population growth and decline in labor force means less economic activity. So once we're past this bounce in real GDP growth that happens in 25, 26, 27. This is real GDP growth per capita, but we'll get this bounce with the rebuilding and the ongoing construction boom that we're experiencing today. But then longer term, we're talking about growth rates headed for 1% and then further out into the next decade, even a half of 1%. And that very limited growth means it's going to be extremely challenging for the state as a whole to fund critical needs like universal preschool, workforce housing, the costs of the recent historic tax cuts that the ledge passed last session, or dealing with climate change. So in summary, while Maui is going through a deep and prolonged downturn that they'll only recover from gradually, the rest of the state is held up remarkably well. But as we get past that recovery phase going forward, we're looking at much, much slower economic growth, and addressing the challenge of limited labor force and demographic change is something we're going to have to tackle head on if we're going to have a prosperous future for Hawaii. Mahalo.